According to a recent report, the global mobile market will add another 1.7 billion subscriptions going forward. 27% of these will come from India and China. My guest and I continue our discussion on the mobile innovation wave in emerging markets. Mark, do customers in these markets have growing income that they can afford these services? Are we seeing them becoming a little bit more well off that they can afford to pay for these?
We have seen over the last few years that there has been an increase in disposable income. But I think there are other factors in that as well. I think the cost of services has been coming down. Operators are looking at trying to really get their minds around how they get into the bottom of the pyramid, how they get to those last remaining consumers out there, how they get the cost low enough, how they become more operational efficient, so that they can pass on those savings into those the low cost needs of their new customers.
Well, Arthur, how do they get to that very last customer out there without spending an awful lot on infrastructure development, because then it may not just be worth their while, will it?
Yeah, the reality is that you have a responsibility to make money for your shareholders, but you also have a responsibility in terms of your license for providing a service in a specific country to reach everyone in that country. So part of the quid pro quo is that you are going to make a loss on the customers in the more outlying regions. That's why in a country like South Africa you can get cell phone reception in almost any far-flung corner of the country, because it's in fact part of the responsibility of the networks to provide that. And that's how it has to continue. You can't say because a particular customer or a particular area is not going to be profitable, we're not going to service that area. Then you're actually going against what should be the conditions of having a license to provide a service.
Sean, how about setting up distribution networks to target all of those rural areas? Is that something that's very important for handset manufacturers?
I think in one of the reports that I read was that there was a statistic where there was a greater propensity for people to travel into the more metropolitan area to physically deal with somebody in an outlet or a store face to face. I have a query, how does this work, etc. There's also a great deal of peer assistance where somebody might travel in on behalf of a number of individuals. But something I wanted to pick up is that whilst the network providers, and you go to somewhere like Nigeria and Lagos, the ubiquity of MTN is visible everywhere, from print to billboard, etc. But there's also there are also networks which are almost aspirational. And you'll see people wanting to get onto that network, and people travel out as well. So it's not just deep rural moving into metropolitan, but people going home and traveling through, which almost evangelizes on behalf of different service providers or network operators.
Mark, is that what your research also shows, that people are willing to travel to get those services and products that they want? You don't really need to go to their door.
Well, people want to trust the service they're getting, and within the rural areas, the research that Accenture did, what we showed was that people would rather go to that area that they trusted, even if it meant traveling large distances, just because they got the trust and they knew that the service would be at a higher level, or they expected it at a higher level.
Arthur, can operators enter an emerging market on the same basis that they would perhaps enter a developed market?
No, definitely not. The dynamics of the markets are so different that they have to operate differently. They have to, for one thing, understand that they're not targeting an urban, sophisticated market where everyone's going to be using their full range of products from the start. They have to start seeding new services or new products as they go along. But also they need to take lessons from other emerging markets. When you look at India, for example, and you find a major cell phone provider saying that they can make a profit of a 15 cents phone call, and then you have providers in South Africa saying they can't make a profit if the phone call comes down to below R1.50 or R1, then you've got to question either the operational efficiency or the strategic intentions of the operator. The operators can in fact make margins off very low cost products, as long as they have a large enough market for those products.
So why do you think we're seeing these discrepancies then, Arthur?
I think it's partly greed. It's partly taking advantage of the opportunity while it's still there to maximize profits. As the interconnect fee, for example, comes down over the next 2 years from where it was R1.25 for a call between networks, that's an additional charge, down to 40 cents in the next 2 years. That takes a massive chunk of margin away from the operators, and they're going to have to start operating more efficiently and intelligently. So it'll be interesting to see how they in fact deal with that particular challenge, because they won't be able to maintain the same profit levels that they have been until now.
Sean, just from your experience, how do you approach a new market that you might be entering? You've talked about Nigeria, obviously a market you entered at one point. How did you approach that differently from your previous markets, and how do you approach another new market that you might be going into?
I don't think there's a one-size-fits-all approach. So typically what our organization has done has supported a handset manufacturer and their entry into the market. So the first assumption is that there is a network or many networks that can be leveraged. There's either a direct entry themselves or through a value-added reseller or somebody that would have the right or agency to distribute. And our job is really about creating that ubiquity in the market, the visibility, the presence and the availability of handsets. And then if the availability is there, to work with the store owner or the individual at the kiosk who's selling to be able to engage with the shopper and the consumer when they came in. So earlier on the discussion was where deep rural might travel in, and they'll travel in because the individual that stands behind the counter has now been equipped to talk about the virtues of the product and the applications it can support and why this is better for this product versus that product.
Mark, no one-size-fits-all approach. Do you have to do your research very carefully before entering a new market, particularly in emerging markets?
Absolutely. I mean, we've seen companies come in expecting big growth in the markets that they've got into and have had difficulties. I mean, there've also been examples of companies who've gone in and done extremely well, and the Nigerian story's been one of those, especially from an MTN perspective. But others who've tried to get into Nigeria have suffered. So, I mean, you definitely have to do your research properly. You've got to understand your customer. You've got to understand the needs. You've got to understand the competition in the environment. And I suppose those are the key things.
Arthur, what do you think a company should do if it wants to be successful in entering a new market?
Well, it has to conduct that on-the-ground research. The greatest frustration for us is when people throw international research at us and say, this is what the research shows, you guys are contradicting it. And we tell them, we have conducted the research here on the ground. Of course it's going to contradict what an international perspective says about South Africa or Africa. So definitely understand your market, not just broadly, but understand what's happening on the ground, understand the kind of things that Sean was talking about that happen on the ground in Nigeria, understand the dynamics of the different territories in terms of the regulatory infrastructure, for example. If you simply launch a product range across Africa, you're going to be in deep trouble.
And of course, the competition must be quite intense, Sean, so I'm sure you're not the only person targeting Nigeria. How do you differentiate yourself from other service providers or handset manufacturers?
I guess it would be, the partners we work with and their ability to support the markets in which we're going into. I don't think it's not a light-hearted decision. When you go into market and you start to build brands, it takes a lot of money to build brands, and it's about continuous repetition and the ability to deliver against what you say you're going to. A case in point was we were deep in one of the markets, and we were speaking to consumers, and we said, well, why this brand over this brand? And the view was because the previous brand couldn't be supported. So that's about our partnership. It's about our ability to go into those markets, the accessibility too, and the markets are relatively difficult to get into. We meet up with new types of hurdles that typically we wouldn't face within an emerged market. Access to markets are controlled. And so access to those markets become a course that needs to be navigated. And then finally, the ability to be able to engage with the trader in such a way that they feel that you will be there tomorrow, you will be able to support them should they have any query, and that they then see you as their business partner. They are entrepreneurs and they want to build their business. And our job is to help them build their business by, I guess, providing great content and when I say content, product and training content to support the sale of that device.